Hello and welcome back to Young and Visionary with me, Esnat Suleiman. In the last couple of episodes, I have been speaking about investing on the stock market. For those of you who have been following, at this point you're probably interested to start, but maybe the big question is, how do you pick your stocks? In today's episode, we have a special guest, a very close friend of mine, Tumusime Msimuko. She is an expert in investments. She advises both corporates and individuals on various types of investments, including shares. So if this is something that you are interested in, grab your notepad, grab your pen, and stay tuned. Welcome, Tumu, to Young and Visionary. This is the show that empowers young people financially, professionally, and personally. We're excited to have you on the show today, and I'm sure the viewers really want to get to know who is speaking to them today. So please introduce yourself.
Thank you, Esnat, and I'm so glad to be here, hoping that I can make a positive contribution to your viewers. So my name is Tumusime Msimuko, as you already heard, and I currently work as a portfolio and business development manager for Nico Asset Managers. About 15 years ago, I started in this market as a financial analyst, and then I have later evolved into a portfolio and business development manager. So in my area of work, I really specialize mostly in giving advice to investors, particularly individuals. Thank you.
Brilliant. I'm sure that you guys will gain a lot from the discussion that I'm going to have with Tumo today. As I indicated in the introduction, today we'll be talking about how to pick your stocks. So to start off, I normally have people approach me and ask me what shares they should buy or whether a certain share is good for their portfolio or not. From your experience dealing with a lot of individuals, I'm sure you know that the answer to that question is not as straightforward as people expect it to be.
Of course.
There are a lot of consideration that you need to make. Could you just speak to our viewers about some of the basic information that any advisor would want to know about the client before they offer any investment advice?
Okay, thanks. No, that's a fair question and a very, very good starting point. So when I approach any client, and indeed as many other investment advisors do, we would want to get to know our client first of all. And our main aim in that is to make sure that we help their client to understand and define their financial goals. You know, financial goals are different. Some people would have short-term goals, others have got long-term goals. So the advice that you give to one person will not be the same as you give to the next person. Definitely. The advice that you give to someone that is employed and has got a constant stream of income is different from the advice you would give to somebody who's an entrepreneur. So it's very important to first of all understand the basic goals and their financial circumstances before you're able to give any advice.
Great. So you've touched on something very important, understanding the person's financial circumstance, meaning that someone could have been your client for many, many years, but when their circumstances change, even your approach to the advice will change.
Yes. That's very, very true. And it's always important that as we're sitting as advisors, we should be able to, tailor or adjust the advice, the plan that you had, so that it can be comfortable for the client to be able to continue investing. It doesn't have to be fixed or cast in stone. It has to be as comfortable as possible, so that the person can continue investing to achieve the goals that they want. And also the goals tend to change from time to time. One could have had different goals 2 years ago. At the moment, their goals will change. So as well, the kind of advice and plan has to also be adjusted to meet the current goals.
You indicated to say that obviously what someone is looking for will have an impact on which shares are more appropriate for them to buy. And this is because the shares themselves, they may be tilted to offer one thing over another thing. Yes. Could you go into a bit of detail around this?
Okay. As we're talking about investing in shares and which stocks to pick, as Esna rightly put it, different shares offer different rewards and different things. So if you're a type of client that is looking for a lot of income that should be generated, it means you need to target the kind of shares that pay a lot of dividends and dividends frequently and consistently. If you're a long-term investor who is just focusing on capital gains, then it's also a different types of shares that you need to be focusing on, so that what it is that you're looking for, you're able to achieve it with the kind of stocks that you pick for your portfolio.
I think, as you've rightly put it, you're looking for certain things. I'm sure that there are also some basic indicators that can point towards that. Information that does not require an expert like Tumu to be able to know that this stock is a high dividend stock, or this stock is a stock that is undervalued and therefore has potential to gain. What are some of those indicators?
With that question, I would like to bring the attention of your viewers to the stock market and the reports that they publish out there. On the Malawi Stock Exchange, they have got a website where they share information on the daily stock news, about the annual financial statements of various companies, and also different information that can be useful about corporate activities or actions that corporates are taking that is useful for people that are on the market making decisions. So in particular, if I was to zoom into the daily stock news, that's really the report that will show you the daily trading transactions that have taken place, the volumes that are trading, and you can also be able to see which counters are in demand and which counters have got a lot of supply. But with the question that Esnat pointed out, this report is very important to give you information about the dividend yield. That is the dividend that a company is paying divided by the price that the share is trading at. Because this one will show you an indication of how much return you're getting through dividends on the stock market. It's a very good indicator for people to see that which companies have got high dividend if they are looking for such companies, and which companies are not focusing so much on dividends, so that one can be able to decide on which information, which counters that they want to pick on. But also, I would like to take advantage and say, this stock market report, it's one that I would advise people that are investing on the stock market to take an interest to learn what it means, because there's a lot of information that is very useful that can point to which counters would be the right ones for the portfolio of a person, depending on their what it is that they're looking for. Thank you.
Okay. You've talked of the dividend yield being a great indicator for those who are looking for stock that pay a lot of dividends.
Yes.
What about those who are willing to be patient enough and wait for their money to actually grow in terms of capital gain? What indicators should they be looking at?
Okay, so another key important ratio on this report is going to be the PE ratio. So this it's a comparison of a price per share and also the earnings per share that each company is able to generate for the clients. So this PE ratio is going to be, it's a good indicator in terms of the value of a company. Generally, the lower the PE, it points at more value that you can be able to gain or achieve once you stay and invest in the company for a good period of time. Another indicator is the price to book value ratio. This is a ratio that could be simplified to say that if a company is trading at a less than one in terms of a price to book value, it means the company is simply trading at a discount to the value of the company. Anything beyond one, it could point at a premium, but obviously it's not as simple as that. There's more that one needs to be able to read into, the context around it, but also in comparison to the other companies on the stock market, the other companies that are in the same industry. Then one can be able to read all that and be able to determine which companies perhaps is still a low value counter, and one that once you invest in it and you wait for a long term, you'll be able to realize a lot of value.
So the dividend yield and the price to earnings, price to book value, they are all just a starting point, really. There's a lot more analysis. Well, when I talk of analysis, I don't want to discourage you and think this is very technical, but this is basic analysis that you could do. So Tumu, could you just dive into a few basics that people can easily do analysis on their own and then decide which stock they should look at?
Okay, no, thanks. I think that's a very, very fair question, and you're right. You don't have to be an expert or have certain specific qualifications for you to be able to, do a simple analysis on which shares you want to buy. So, personally, I feel the best starting point is to look at the industries. There are various companies on the stock market in different industries. So it would be good for one to see which industry it is that they'll be interested in. And for you to do that, you can look at which industries are doing well. So you've got the telecommunication companies on the stock market, we've got the financial companies, we've got the insurance companies, and also manufacturing. So an analysis of all the industries that are there is a good starting point for one to be able to see which counters or which industry they want to be part of. So in terms of the growth of the industries, they're all performing and growing differently. And that information is public information that even the National Statistics Office publishes in terms of the growth per sector. So one could be able to target the sectors that are doing well and then choose which sector they want to be able to invest in. Now, having selected which sector you want to invest in, now you can now drill deeper to see which companies are in this sector and how are these companies performing. Some of the things that you can look at are the track record of the companies, how they've been performing in the last few years. That gives an indication to where they could possibly be going. Other areas that one would be important to look at is the management of the companies. How confident do they seem? How well are they been performing, and how likely are they to positively contribute to the strategy of the company so that the return or the performance of the company can continue to do well. And obviously, you can now compare company to company within the industry to see which company has got a competitive advantage over the other one. Because if a company has got a competitive advantage, it means it's likely to perform well, post good profits, and that those same profits would now be able to be shared through dividends to the shareholders. And now, further to that, one can now use the stock market report to do simple valuation, simple analysis, without really having to know very strict or very difficult, complicated formulas. But you can be able to do the simple analysis using the ratios that we earlier spoke about, the price to earnings ratio, the price to book value ratio, and also on the stock market report that I spoke about, you'll be able to see the profitability that each company has performed in that particular period.
Yes, so you touched on something very important there when you were talking about the company-specific issues. You mentioned things that probably people don't take very seriously, like when they see a publication in the newspaper about a company employing a new managing director or a new CFO. And the reason companies actually do that is to make sure that they give confidence to investors to say they are getting people with the right skills, people who can continue to make sure that the organization grows in the future. Because if the companies do grow, they do well, they earn profits, and those profits either turn into dividend, and they also push the share price upwards. So in addition to these announcements that come out about new appointments, we also see publications on profitability, trading statements. Could you comment a bit on that too?
Yes, Nessa, that's a very important aspect of the information that an investor needs to have when they're making a decision. So you'll see that companies will publish at least twice a year. They'll publish their half-year financial performance, and they'll also publish their full-year financial performance. So with this information that is usually open to the public eye, either in the newspapers or on the stock market, where they'll be able to publish on their website the annual reports, you can go there and look at the financial performance of the company, and that's where you can be able to come up with the track record to see what profits they were able to post the previous year and what profits they have posted in this current year. You can look at the revenues and the direction that really the companies are going, and that's where you can also be able to read more about the earnings per share, where these the earnings are being generated from. That also begins to show the sustainability or the direction where these companies is likely to be going. He also mentioned the trading statement, and this is a publication that will usually come out at least a month before the financial statements officially come out. So this trading statement is going to give you an indication to say what kind of profits they're expecting. And for investors that are knowledgeable, really that's what they look out for most, because it's like a warning that they give you ahead of time. So if a company publishes that we're expecting to post a profit that is 60% higher than the previous year, automatically you know that then there's a lot of value that is coming through. Then one would be able to go ahead and place an order to buy the shares before that information is factored into the share price, and before the share price goes up, then you're able to take advantage and buy the shares ahead of time. So the trading statements that we see in the newspapers are very important and should be used as part and parcel of information that you should be using for making a decision on which stocks to pick.
On the issue of picking stocks, I often get people asking me whether they should buy a stock simply because it has a low price. Like, does a low price imply that it is cheap? Could you speak a bit more on that?
Yes, that's a really fair question, and I get asked that a lot. So there are several aspects in terms of how you can look at that, and I'll probably pick on one or two. The first one being that you have to look at the specific company in relation to the other companies that are in the same industry. So if you're looking at a bank, for example, that in terms of the size could be the same as the other bank, but the price difference is quite high, then that could point that perhaps this other bank, the price is lower, it's cheaper than the other one. But again, that's not the only information that one has to look out for. We've already spoken about the industry analysis that one has to do, company-specific information and financial analysis. That is the starting point for you to be able to see that. Narrowing down to the low value counters. Usually, it's a good starting point for a new investor coming in to buy these counters that are trading at a low value compared to the others, because it's very likely for a low value counter to gain in terms of a share price percentage wise than a high value counter. So the same price gain in terms of a value of, let's say, 10 kwacha on a counter that is trading at 100 kwacha is higher than the same 10 kwacha on a counter that is trading at 2,000 kwacha. So low value counters could be a starting point, but they don't always mean that a low value counter therefore is a cheaper counter. The other analysis has to come in place for one to be able to make that decision.
Yes, and actually I think just to really drill down that point, another important thing that you should look at on the stock market report as well is the market capitalization. Because what the market capitalization then does is gives you the actual value of the entire company. And the market capitalization is derived from the price and the number of shares that have been issued. Meaning that two companies that have an equal value, if one of them has issued out more shares than the other, its share price will be lower than the other one. But you see that overall the value of the two companies is actually the same, but the price is different simply because the other one has more shares than the other one does. So there are still a few other components that you will want to look at before you make a decision simply on the basis of price. So price should never be the only factor that you should consider. So look at the low value counters, then look at all the other information. Make sure that you make yourself comfortable with the share that you are investing in. So, Tumu, I think there's still people out there who really struggle with all this analysis. As simple as you have made it seem, they will still struggle with it. So I am actually thinking there's also something that works sometimes is to follow the market. But which market do you want to follow? Could you speak to that?
Okay, so you're right. Sometimes if you don't have the information, you can really just follow the market. So how do you do that? And it goes back to the stock market, the daily stock market report that comes out. Again, viewers, this is a very important report that you need to take time to understand. So on the daily stock market report, it shows you the volumes that are trading on any given day. There will be a weekly one that is also going to show you the volumes that have traded on that particular week. And you'll be able to see which companies or which counters have traded the highest amount of volumes and which ones are trading more frequently in the week. That points to you which companies a lot of investors are interested in. And most of these investors could be fund managers or pension funds who have got experts that drill down on this analysis. So then you can be able to see where you also need to pay a lot of attention to and where maybe you need to focus a lot of information on. Again, on the stock market report, you can see the kind of bids and offers that are coming through. What we're simply saying is what price people are willing to buy a certain counter on and what price they're willing to sell the counter on. So again, how those are moving will help you to see where there's a lot of demand and where there's excess supply. So that again helps you to see where a lot of activity, where a lot of interest is going towards.
Yeah. Let's just add a little side note to that, because sometimes there's also opportunity in the stock that people are not seeing.
Yes.
So there are sometimes when you can take an opportunity to buy low in a stock that no one is interested in, but only do that if you have done a company-specific analysis that points to an opportunity for the company to actually grow in the future. But if there's nothing to that effect, do not cheat yourself and say, I am taking an opportunity, because there might not just be any opportunity.
Yes, that's
and true. Also, when Tumu spoke about following the market and looking at where the transactions are happening, when we mean big transactions, we're not talking about 2 million, 100,000 value transactions. The fund managers or the institutional investors are trading huge volumes, hundreds of millions, sometimes even billions. Yes. Those ones are where the professionals are trading. So that is what you should be paying attention to if you're just simply going to follow the market. So we've talked a lot about what stocks to pick, when to buy, but we haven't talked about when to sell.
Yes.
When should someone consider selling?
Okay. That's a very fair question. That's a very, very common question that I also have to answer on a day-to-day basis. When do I sell my shares? Usually people want to sell shares for two reasons. Either when the price is going down and they see that they're making a loss, so they're wondering whether they should realize the loss, because until you sell the shares, the loss is not an actual loss. It's just there, but you haven't realized it. And also when the price has gone up significantly, and people are asking, do I sell my shares and come out now? And there's no general answer for that question from one investor to another. Because if we go back to the initial point that we started in, is that each and every person has to have define their own goals. And it depends on your goals and the time that you had set to invest. That's what is going to inform when you should sell the shares. Because it doesn't make sense to just sell the shares because the price has gone up. What if the potential for the price to go up more is still there? So you might lose out. So a simple answer to that is, one, it depends on your goals and whether it's time for you to let go of the stocks. And the other consideration is looking at the market conditions. If a company's price has dropped, and looking at the industry that it's performing in, looking at the company-specific things, there isn't any likelihood that this company is going to turn around. Then one could decide to say, okay, perhaps it's time that I should cut my losses and then take my money to invest elsewhere. But avoid emotional decisions, because sometimes the price can just be having temporary fluctuations. Sometimes there's no noise, there's nothing happening in the company, but you find that the price is going up or down, up or down. Those are just temporary market fluctuations, which are normal and typical. And one has to be able to withstand that and wait to be able to sell only when it's right for them. So again, don't be just overtaken by the market and just sell as it is. Another important aspect that I want to add is that Malawi has got a favorable tax regime, whereby if you hold a stock for more than 1 year, you're not going to pay any capital gains. So it would be, why would I want to pay 30%? If I can save on that, definitely I would wait for at least a year and then before I even consider selling the stock. So those are some of the things that I would look at in terms of when to sell the stocks.
Okay. So we have shared a lot of information today. Tumo, any final words? I don't know if it's just final words or general tips, something that someone can take back with them today.
I think I would just share maybe a few general tips. I think this is something that we didn't touch on, and it's very important about diversification.
Yes.
Diversify. Don't put all your eggs in one basket. Having done your analysis, target as much as possible to be able to invest in different companies so that you minimize the risk of loss. Should one company's price does not do well, then at least you're not disadvantaged a lot. So the more you diversify, the better it is that for you. Another thing that I'm going to say, and I know I've said it already, is have a long-term view. Typically, if you're looking at investing in the stock market, a minimum of 5 years, that's what you need to be looking at. That's where you can be able to see a lot of value on and benefit a lot. And another thing that helps for one to be able to stick to that is you only invest funds that you're willing to, part with for the long term. So don't part with funds that you need soon. Then you'll be driven to sell when it's not the right time to sell. But I think my one final comment is going to be that one should not be emotional when they're picking stocks. One should not be emotional when they're selling stocks, because that can completely throw out your whole game. So it's very important to be objective, have your facts right, and follow the advice that you may have been given by a fund manager, or follow the facts that are coming out, having done the analysis that we've spoken about.
Yes, thank you very much, Tumu, and for sharing all of this information. This is information that people pay to receive, but here she is giving us all this information for free. I think I must really say that, investing in the stock market, if you did watch the previous episode, I was talking about the risks of investing on the stock market. You can never get it right 100%. If you're lucky, you might. Yeah. But I gave a personal example where I lost money on the stock market. I was talking with Tumu a couple of weeks ago, and she told me of how she sold a share right before it started gaining. Yes. So things happen on the stock market, and that is why you really, really need to make sure that you do follow the advice that she's given us. It helps to minimize the potential of making a loss. It minimizes the potential of you losing out on an opportunity. So I'm glad that you could join us today. Like I said, thank you very much, Tumu.
You're welcome.
I hope that you guys continue to follow this channel. Remember to subscribe as well as to hit the notification button. And I hope that you will catch the next episode. Have a great day.